It's Quant Trade Edge, and we are looking at a 1-minute chart of the S&P 500 as we head into the close for what I've explained before is the MOC trade, market on close. This is the 1453 bar. So here, the 1450 bar had sufficient volume. We usually look for about 10,000. We had 12,000. Then really, I'm going to go with whichever direction we start moving off of the 255 bar. So I might be silent here for a little bit. I want to get get my executions ready. And the idea is whichever way it takes us, it should continue because the last 5 minutes of the day are not truly random. They tend to be up, 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 or down, 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 down 40% of the time. From the 32 possible combinations of up and down in those 5 minutes. So I'm going to get quiet here for a second. 60, 60, 750, 59, 60, 750. Okay, this closed at 60. Oops. Okay. It took me in at 60.50. I actually needed that to be 61.50, but I won't complain. Initial stop will be 58. And I will trail stops behind these 1-minute bars. So here, 59, I'll get my stop ready to be 58.75. Wow, this can be a very big MOC if this is just the first minute. So we've got 20 seconds before I move my stop up to 58.75. Ten seconds. I mean, I can go ahead and do it. It's not going to come back down this far. If it does, you sure don't want to be in it. So, okay, I move my stop there. Now I'm just tracking this bar to see where this low is going to come in. Let's see if that's the low, 65.50. Let me get 65.25 ready in my stop. Okay, I've got it ready, but I've got 40 seconds before I transmit it. Now you can see even here from all the way from 51, you got an equal low, higher low, higher low, higher low. This one's tough because it's red. Let me give it a little bit of room, down to 450. If this were a green bar, it'd be really easy to just put it one tick below. Given that it's a red bar, I'm going to give it a couple of more ticks. May not even be a red bar. Okay, it's a green bar. 65.25 is the stop. So now we're already in the profit zone. We're already almost 5 points in the profit, even if we get stopped out. But usually that 259 bar can be a really big bar. So, you just want to stick with the trade and take what the market gives you. I remember back during COVID, there were some 40-point moves. It was crazy. Which back then when the prices were dropping, that was, 2%, a 2% move in the last 5 minutes. It's actually an amazing time to play weekly options, especially on a Friday. Given that this is a red bar, I'm probably just going to keep my stop at 525. Man, that would be annoying to get stopped out, but can't cry about making 5 points. So that was 57. This is 58. So 575. Yeah, I may as well just leave it at 525. This is 2 ticks difference. Come on. Come on. You didn't put in this bar to fail on the MOC. So look at this red bar, 66, 65.75. If you would have moved your stop one tick below there, you would have gotten stopped out. That's why I didn't do that under a red bar. I've seen this happen before. So I kept it here, 525. I mean, I can move it up to 550. It's not even worth the effort. May as well just get ready to punt it up here. Let me see, is there any horizontal resistance up here? 74, 73.25. I'll just offer some at 73. Move my stop to 68.75 because I don't want to see it go backwards. Come on, come on. Clear this healthily. $20. I might just punt it here to market. Come on, come on. Okay, I punted. I'm out. 49.70.75. Let's see where the actual close comes in. It's probably going to get 3. Okay, 71.75. Okay, I shorted myself a point by getting out early. But you see the idea here, right? The idea is that in the last 5 minutes, there are a lot of either buy orders or sell orders, and we don't necessarily know which one it is. We just know that after a day like today, mom and pop are hitting the buttons on their 401k. So whoever's executing for those funds wants to step this up in an organized fashion because they will owe, I call it fidelity. They will owe Fidelity this final print, 49.71.75, but they were able to accumulate at a weighted average price less than that. So they want to push it up and make that the high of the move. And that's all the MOC move is. And you just typically get higher lows. Here we did get one out of sequence, and I called that because of this red bar. I've seen this happen before where they tick you out by, it's happened to me before. You get ticked out by exactly one tick, and you're pissed that you missed this last move here. So I just kept my stop under here, under the green bar. And then look at this now. And this is what I call the post MOC move. You tend to get at least 2 points. I mean, let me see, where did this come off? 71.75. Yeah, 3 points now. Because this was a manipulated move higher. And if they were losing control up here, this wasn't a huge 259 bar, so they were losing control, meaning there were sellers there, and they went ahead and bought extra because where this print settles really affects a large amount of a swap for them. So they don't mind giving up. Oh, did you see that change in front of our eyes, the settlement? They don't mind buying a little bit of extra, dumping it back here and losing a little bit because the much bigger swap is going to be settled at that price. So anyway, I'm glad I got a chance to do this live. I was doing it live on the first day of the year where there was a huge MOC trade, and that ended up being a snafu. My video stopped recording, and I tried to do a cleanup video, but it's annoying. Much better to see it live and in action.